Uh, all right, welcome Vaughn from
Hey guys.
Butter GG. What's up, man?
Hey, yeah, doing good. It's even well.
It's been a while. So, Vaughn, you are the CEO and co-founder of Butter, a new primitive for programmable capital allocation that's rules-based, on-chain, and powered by prediction markets. I think the place we need to start is describing what the hell that is, my friend.
Of course. So I think most people have a good model of prediction markets. Effectively, we're using markets or the price mechanism to basically forecast what we expect to happen in the future. And it works with a really kind of simple primitive. We design a token, for example, and we basically set up a contract that says this token will equal $1 in the future if some event happens. Pretty simple. And just like most markets, if people think that the price of that token is too low, they will buy it because they expect to profit. If they think it's too high, they will sell it because they expect to lose money. And if everyone thinks about that event, let's say it's like the chance of someone getting elected, what they're likely to do is they're likely to give you some information about what they think is going to happen by buying or selling that token. And so this is how prediction markets work. And there was a really good article by Vitalik a little while ago called InfoFinance. And InfoFinance really is just any real market that's been designed mostly because it's going to help aggregate information from lots of people distributed across the world. And we've already seen the impact of prediction markets. It's been absolutely incredible in terms of acting as a really good barometer of truth, right? For pulling truth from anywhere in the world and kind of displaying it. And also really good for helping us see where maybe the truth that was being pushed by like media or like particular like people in charge or people in positions of authority, helping us see kind of the truth, right? What the people think. Now, what was really exciting about Vitalik's essay is he spoke about InfoFi, and what we're building, these capital allocation markets, are really part of this broader InfoFi movement. This is markets who are using financial primitives to mostly for their ability to elicit information. Now, with us, we're going one step further. We're building what actually something that's been around for a very long time and is mentioned in the original Ethereum white paper, which is futarchy or decision markets. So where we design a market to aggregate information so that we can then make a decision. And our markets are this end-to-end where we say, hey, we want to allocate some money. Tell us what's going to happen if we allocate the money. Markets tell us. And then we use that to actually implement the decision, and we allocate money. And we recently ran one of these with Uniswap Foundation and previously with the Optimism Foundation.
What kind of predictions are you looking for? I mean, maybe can you explain a little more specifically, perhaps with an example?
Yeah, of course. So a good example is we have a foundation of a DAO. They have a large pool of capital. They're trying to fund ecosystem growth. There's loads of different places they could actually allocate that capital. And we run markets basically looking at the impact of the capital if they were to allocate it to maybe one of 5 projects, like DeFi projects, building on their network. And so what we did at the start of the month is we ran a conditional funding market, and its job was to pick between Euler, Morpho, Venus, and Compound, and to see which of these, if given a grant of about $100,000, would maximize the amount of TVL that actually accrues to Unichain. So we ran that for a week. Markets gave us our TVL forecasts, and then we gave it to the one who created the biggest delta over that 1 month period. So that's actually running right now. You can go to our website and you'll find the markets and how they're actually progressing over time.
What's the website?
It's app.butter.markets.
There we go.
And does this not just incentivize people to pump their own bags in these sort of votes, or how do you make sure that the mechanism ensures that the right, truly the most likely outcome is what's forecast?
Yeah, so this would be like, let's say it was a prediction market. This would be like someone going in and pumping the price of like the Kamala vote. They really wanted Kamala to win. Absolutely, you can do that, right? But the point is that let's say that the actual probability that she wins is like 50%. Technically, every single time you buy a token above that, you're losing money, right? All of those are losing tokens. And so this is similar. So yes, you can pump your bags and you could win the grant. You'll have the grant, you'll produce less TVL, and then anybody who bought those tokens would lose money. And so the prediction market mechanism basically is holding the whole mechanism together. It's making sure that you're not incentivized to buy tokens that ultimately are worth nothing or you'll lose on.
So you do end up running the simulation or sort of checking the facts, regardless of where, even if the whole allocation is made to the whatever won the prediction market.
Yeah. So what we actually do is we run a market for every project. So a market that predicts what will happen if they get funded and what happens if they don't get funded. And so what ends up happening is the one you fund, you run that prediction market. So now you have just basically a normal prediction market. Morpho has received $100,000. What do you think their TVL is going to be? And the other ones are, these projects receive no money. What do you think their TVL is going to be? And so basically you get rewarded if your predictions are right. And if you bought, let's say you tried to pump one of these markets up or tried to slam one of these markets down, you're going to lose money. So that's the idea, is the markets doing the conditioning of people's predictions.
Yeah, that's super cool. I mean, I think there may be a lot of people listening here who haven't sort of been in the bowels of some of like the DAO decision making that was happening over the early 2020s. Can you put a fine point on like the challenges that these foundations or projects that you're working with are facing, and why they would look to a tool like this to solve them?
Yeah, absolutely. My co-founder and I spent a long time in DAOs and speaking to people who operate in DAOs or govern DAOs, delegates, and so on. And I think what's really interesting is we've tried loads of things in DAOs to try and make better decisions, but it's really difficult to make a decision for a large group of people. And I think most people have an example or have experience with this, where you have to figure out how do you get everyone's opinion and make sure that it's a fair decision based on everyone's thoughts. The most simple way we have is voting, and that's basically what we have in crypto. So we got people to come together and use their tokens to vote. So we have a token weighted vote. If you have 10% of the supply, you get 10% of the vote. And the problem with that is mostly, I would say, it's just that people don't turn up. So what you end up with is a tiny group of people who actually make all the decisions, and this is terrible for the other people. And if you think about let's say, I'm sure lots of people listening here have spent loads of time holding tokens in loads of DAOs, loads of protocols, and so on. Like, how would you actually be able to monitor every single one of those DAOs? So what you end up with is like a small group of people end up voting, and it doesn't really represent everyone's thoughts. The solution has been to create delegates, representative voting, which most of us are familiar with because it's how our countries run. And this has another problem, right? Which is that those people tend to have their own ideas about what works. So you don't necessarily get the will of the people or of the token holders. You get the will of the people who represent them. And that creates this opportunity for misalignment, let's say. And so what you can really see in DAOs over the last 5 years is lots of this misalignment playing out. So things like capital being sent the wrong way, or to projects that maybe the delegates prefer, or people who just have the information to decide things like who we should fund to grow TVL on our platform, not being the people who make the decision, right? We have people who are great at understanding governance, really great at understanding design of the protocol, but really not good at growth and marketing and so on. And I think we saw this even at the individual DAO level. And we've seen it all the way at the top level, right? We've seen this at Ethereum Foundation, for example, where people looked at the foundation and said, well, where are the people doing marketing? Where are the growth people? Great researchers, great on the supply side, but what about demand? Who's doing that? And so this is kind of what we tried to balance. And what markets are really good at doing is actually finding the people who have that information and incentivizing those people to come to market. If you have no information, you have nothing to sell to the market, right? You have no information to profit from. And so that's what markets tend to do, is they're very, very good. They're a good general mechanism for just pulling the right people to make that decision when it matters.
Yeah, I was going to ask about your prediction market scenario. I mean, maybe I'm just not I don't have the information to sell, but it strikes me that maybe nobody knows the real answer. So everybody is gambling with their prediction in this system, right?
Yeah. So I'd say, let's say you started from scratch and you had a prediction market on, I don't know, the price of something that had never existed before. We came up with a new type of product, and we said, what's the price? People were predicting what the price is. Now, I think that what you're looking for really is in this wisdom of the crowds idea. Is people can kind of guess, they look at things and they'll say, well, this looks kind of like this, and eventually you're pulling all that information together. And to be honest, this is how price is discovered for most things, right? That's the price discovery function. That's what markets do. I think something's really high, you think it's really low, we kind of meet in the middle, and then we end up with a price. So I think the way to think about this is not no one has information, but if everybody makes a bet first time round and then that outcome is revealed, right? Because we do have an event, we're predicting some event. When you get to that event and you see the revelation, you see the gap, right? Here's what we thought, here's what happened. This is the information you take into the next round, right? You take into the future. And so the fact that this is repeated means that people get better and better and better at accumulating information. So, some of the first markets might be a bit off, but they should improve over time as you create more and more information for people to actually use in their trades.
So I'm really curious about maybe the human or the social side of this. I think there is a usual question that I hear you get asked is like, how will whales not manipulate this? Which I think is sort of a subset of, I don't feel like I can trust markets, despite maybe markets being, incredible at price discovery and all the things that you were saying there. And so to me, it feels like there is like, especially if we say like, imagine futurarchy applied to our governments, instead of the representative democracy, maybe we can roll out these markets. And I can imagine the uproar over that would be significant, even if you had all the data to prove that it is a far better way to allocate resources. So how do you think about the social side of adoption of these types of markets?
Yeah, I mean, you'll notice that we've picked a subset of decisions. I do think there is this like natural kind of aversion to using markets. There's a sense that you're giving up some control, and ultimately control is very human, right? We want to have control over the things that are upstream of us as much as possible. This is why we have voting. And as soon as you just cut people out of that, I think that they don't really feel like they can. This is the legitimacy point, right? Like you give legitimacy to things that have rule over you by accepting them. And so if you reject it, then ultimately no futarchy can ever rule you, right? If you won't accept the market. I think that what's interesting is we probably are happy to accept worse forms of decision-making if we have some control over them. And this is actually what kind of gives you democracy. Like it's the worst form of governance it's the least worst form of governance we could have, because at least we will have some control. There are other types of governance which have a lot less control, right? Just one person. So I think the way to think about this is not that futarchy becomes this dominant form of making decisions for all of society, but that it's really, really useful in some situations where markets clearly outperform and people don't have this squeamishness around giving up control. So, for example, capital allocation seems to fit this quite well, because most people are quite, they have strong opinions on where money should go, but ultimately ROI dictates the outcome. Like if the ROI is better, then most people strictly prefer the fact that ROI is greater. And so you have this really nice feedback loop where people would be happy for markets to allocate to things that kind of look like markets. I do agree that it's much harder to imagine a futarchy running the whole world. And I think I was speaking to another founder in the space, and they said, like, nobody wants to hire a boss. Like it doesn't really make sense. And I think that's how I feel. I don't want to put something in charge of me, regardless actually of how, unless I have to, regardless of how it's structured. But you might want to, when you consider this question of like, would you prefer a market to be in charge? I think you should consider how much influence you might have over a market, and how human that feels when you compare it to something like, I don't know if you saw like Darkesh's AI CEO like podcast, where he's saying like, imagine you just had AIs like making all the decisions, and this is a world we can actually envision now, right? Just AIs making decisions. And the question is, how much actual participation do you have as an individual in that world, right? Where it's just some algorithm that you can't see or you can't actually interpret. That I think seems much more difficult. So in that world, maybe markets would be quite acceptable.
It strikes me that one element that makes the design of what you're proposing here really successful is that you don't require an oracle, right? You have the maybe for some technical reasons you may have to actually have an oracle involved, but the things that you're comparing, the ground truth that ultimately resolves these prediction markets, is an on-chain value. So there's a nice coherence to the system.
Yeah, that's a great point. So we do use oracles, because I think that there's, even though you can have on-chain values that you can pull directly, which is great, like TVL, there's still some work that goes into pulling those values, right? And so at the moment we do use an oracle because it allows us just to rely on like existing on-chain oracles like DeFi Llama, or on-chain data sources like DeFi Llama. But yes, exactly. If they're on-chain, then theoretically you can have like an oracle-less model.
Can you maybe, I know you've done a few fairly large pilots, I guess, or markets with, I think, Uniswap being one. And I'm curious if you can maybe just give us a bit of a lay of the land. Who's using this? Where is it being adopted? Is it mostly proof of concepts yet? Has it moved to prod? Where are we at?
So we've run two large markets. One was with Optimism, and that was in March, and that was actually was for 22 projects. It opined over 22 projects and selected 5, who then received 100,000 OP in terms of a grant. And that entire setup was play money. So the idea was we just rolled it out And you could kind of say this was like a test, right? Because the real money wasn't on the line. So all of the skin in the game principles of prediction markets weren't really there. Though prediction markets that are play money have a huge lineage as well. There's Manifold, which is one of the biggest prediction markets just after Kalshi and Polymarket, of course. But we started there, and then the next one we launched was to really try and get real money markets live. So we now have real money markets live. The first market launched just at the beginning of this month. That was with Uniswap. So still like still early days, but tons of commitment from foundations and DAOs and protocols. And we're expecting to roll out even more over the next few months. So there will be more to trade on and to engage with. And again, you can see these on app.butter.markets. I would say that the process of setting them up and rolling them out does take some time, because unlike Polymarket, we don't just launch markets and then people trade. We have like someone comes and launches the market to allocate some money. But the pipeline's really strong. We have lots of incredible projects and well-known protocols who are lining up to launch these. So we'll have some soon.
Yeah, I'm just loading up the markets here. I'm thinking about what the specific markets are. Like here, there's a grant decision. Estimate each project's 30-day trailing average Unichain TVL after 30 days. So these are things that, I mean, maybe you can speak a little bit to the nature of the test run that you're doing on Unichain, because it seems like, yeah, maybe just to help people understand a little bit what kinds of things these prediction markets can be addressing. So here it's TVL of a variety of different projects. Is that it?
Yeah, that's it. So at the moment, so what we're trying to help with is this ecosystem growth problem, so at the highest level. So you could Uniswap Foundation or Uniswap or Unichain, they could have someone who's just deciding where the funds go, right? How to grow TVL on Unichain, and actually do have that. They have hired, I think is public, is Gauntlet. Gauntlet are involved in the incentive campaign. But we also want to look at other mechanisms that could be more fairer or produce better results and have more efficacy. And so markets are being used as well alongside these other mechanisms. But the idea is very simple. It's like we have some capital. We want to make sure we get as much return from that capital as possible. Markets can tell me where that's going to be. And we're using TVL as the metric just because we think that it's fairly well understood, it's quite universal, right? It maps across different teams, different projects, and kind of holds everyone to the same standard. Plus, it's really large, so it's fairly difficult to manipulate. It's not impossible, but it's fairly difficult, or at least very expensive too. So that's really why it's TVL. But you could imagine a whole set of different KPIs, and actually thinking about KPIs and KPI markets is actually the really interesting part, especially as it relates to info finance. So thinking about all of the KPIs that we track across, say, Unichain, for example. So there's the amount of people using it, the amount of gas being spent, the amount of sequencer fees, the TVL, of course, all types of assets. And then thinking about like forecasting those into the future. And if we had all of those different KPI markets or these like future prices, it might tell us a lot about how Uniswap is going to adapt, or at least what markets believe Uniswap is going to do, or Unichain, how Unichain is going to evolve over time. And so these, like the idea of like crypto having like forward curves for different KPIs and forward curves for assets is in the same way they have like forward prices or futures prices for assets is an incredibly like information rich like world. And I think that's what we're trying to build. We're trying to really kind of extend the information space. And that's what info finance is all about, building a very rich information space, and then seeing how people might want to use that information. So one is like, I'm going to use that to allocate capital. It could be to think about how to expand the network itself, decisions that are made are like at the core in terms of governance, like upgrades that might be useful, how upgrades might affect some of those KPIs. For example, like before you implemented like EIP 5119, you might want to know that there might be a huge effect on validators and the amount of like people who sign up and do validation. There's things like that KPIs markets might be able to forecast and give you. That's really what we're interested in, and I think that's like, it goes beyond TVL. TVL is just like a great place to start. It's like a really firm, like quite solid, well understood and well grounded metric, but there are tons.
Vaughn, that's awesome, man. Thanks for going deep with us today. It's I'm just infatuated with these new mechanisms that expand both the use cases of crypto in really interesting ways. I think it does pulls us back into more of the cypherpunk world a little bit, and I think it's pretty easy to imagine some really interesting outcomes coming from the broader adoption of Butter. So thanks for hanging out with us today, my man.
100%. Thank you, guys.